Reading of article written by CMA T.S. Khurana sir. The article is titled Budget 2023 and Income Tax Provisions. Abstract. The Budget 2023 has come up with a plethora of changes proposed in the field of direct taxes. Proposed changes cover income tax and TDS both. Besides extending tax rebate up to 7 lakh rupees under new tax regime. It affects the assessee who are taxed under the head salary, business and profession, capital gain, both long-term and short-term, and income from other sources. Provisions under TDS cover online games and EPF withdrawal, etc. Other proposed modifications provide relief to cooperative society on cash withdrawal. Foreign remittances in some cases are likely to be covered under higher rate of TDS. Union Budget 2023 presented in Parliament by Honorable Finance Minister Ms. Nirmala Sitharaman on 1st of February 2023 has proposed some changes in the Income Tax Act 1961. These changes are likely to affect general public at large. An attempt has been made in this article to sum up all those proposals in simple terms for easy understanding of citizens and professionals. General provision. Tax rebate. Tax rebate under Section 87A has been increased from 5 lakh rupees to 7 lakh rupees. This is applicable only in new tax regime. Basic tax exemption limit. Basic tax exemption limit has been hiked from 2.5 lakh to 3 lakhs. This is however again applicable only in new tax regime. Surcharge. Upper limit of 37% has been reduced to 25%. It is applicable when income is beyond 5 crore and is applicable only in new tax regime. Existing slabs are as under: income between 50 lakh to 100 lakh 10%, income between 100 lakh to 200 lakh 15%, income from 200 lakh to 500 lakh 25%, income between 500 lakh and above 37%. Last step has been reduced from 37% to 25%. Option to adopt new or old tax regime. Taxpayer not having any income under the head profits and gains of business or profession can opt for old regime. This option may be exercised by him or her in each year separately. However, taxpayer having income under the head profits and gain of business or profession can opt for old regime only once. After that, they will continue to be taxed under the new regime. They cannot exercise this option every year. Deduction of donations is proposed to be restricted under Section 80G by omitting certain name-based funds. A refund of income tax is proposed to be set off against existing demand if any. If assessments or reassessment is pending, the refund due in such cases will be withheld by the assessing officer till the date of assessment or reassessment. Senior citizen Senior citizen savings scheme is available in post office and banks, both public and private sector. Previously, maximum limit of deposit under this scheme was 15 lakh, which has now been raised to 30 lakhs. It shall earn interest at the rate 8% per annum. Post office monthly income scheme is available in post office only. Previously, maximum limit of deposit under this scheme was 4.5 lakh rupees, which has now been raised to 9 lakh rupees for an individual account. In case of joint account, the limit has been raised from 9 lakh to 15 lakh. It shall earn interest of at the rate 7.10% per annum with effect from 1st of January 2023. Women Mahila Samman saving certificates is available for women senior citizen who are over the age of 60 years. They can deposit up to 2 lakh rupees, which will yield 7.5% per annum. Partial withdrawal are also allowed in this scheme. Income salary standard deduction of 50,000 rupees for salary employees and pensioners existing in old regime up to under section 16 clause 1a shall also be allowed in new regime. Leave encashment salary. Present limit of 3 lakhs under section 10 AA clause 2 for non-government employees has been revised to 25 lakh subject to maximum of 10 months salary. Family pension exemption of 15,000 already exists in the old tax regime. The same shall also be available in new tax regime. Income, business or profession. Following changes are proposed for SSC covered under this head of income. Presumptive taxation scheme increase threshold limit. In another proposal, threshold limit for presumptive taxation scheme for eligible businesses has been increased from existing limit under section 44AB and 44ADA of 2 crore to 3 crores. Similarly, for specified professional under section 44ADA, it has been increased from 50 lakh rupees to 75 lakhs. However, this shall be applicable in cases where cash receipts are not more than 5% of gross turnover or receipts. Another change proposed is in respect of presentive scheme under Section 44AB, 44AD, 44ADA, etc. for non-residents is to disallow carry forward and set off of losses computed as per books of account with presumptive income. Optional inventory audit by cost accountant under Section 142(2)(a) has also been introduced by FM in this budget. This is new concept in which the AO has been given the power to get inventory valuation by cost accountant with the prior approval of Commissioner, Chief Commissioner. This would be deterrent to revenue loss due to undervaluation of inventory. Capital gain, long-term capital gain. Exemption available under Section 54 and 54F investment in houses after selling a house property has been restricted to 10 crore only. There was no such limit on this amount earlier. Any profit gains on conversion of gold into electronic gold receipts and vice versa will not be treated as capital gain. While computing capital gain in case of joint development of property, it is proposed to include the amount received through checks, etc. as consideration. Presently, interest paid on borrowed capital is allowed as deduction subject to certain condition under income from house property under section 24. This amount is also treated as cost of acquisition on its sale, thereby reducing capital gain to some extent. It is proposed to disallow that part of interest from the cost which has already been claimed as deduction from income under section 24 in earlier years to work out cost of acquisition. This will result in higher amount of capital gains. Short-term capital gain. The income from market-linked debentures is proposed to be taxed as short-term capital gain at the applicable rates. Income other sources. Any income from insurance policy with an annual premium of 5 lakhs or more taken after 1st of April 2023 shall be taxable. Any income here means net of receipt from the insurance company and payment made against these policies. Section 10(10)(d). This will not affect the tax exemption provided to the amount received on the death of the person insured. It will also not affect insurance policy issued prior to 31st of March 2023. TDS provision. Cash withdrawal by cooperative society up to higher limit of 3 crore shall not attract TDS provision. Beyond this limit, TDS shall be applicable at 2% under section 194N. Earlier, this limit was 1 crore and beyond that TDS at the rate 2% was applicable. TDS on online game has been made applicable at 30% on payment made on winnings. This shall be deducted by the company making the payment to the winner even if the amount of reward is 10 rupees only. Previously, there was a limit of 10,000 for such TDS deduction. TDS on EPF withdrawal has been reduced from 30% to 20% on taxable portion of EPF withdrawal. However, this shall be applicable on non-PAN cases only. It is proposed to withdraw the exemption from TDS currently available in interest payable on listed debentures. Foreign remittances for other purposes except education and medical treatment is proposed to be covered under the provision of TCS provision at the rate of 20%, earlier 5%. The rate of TCS for foreign remittance beyond 7 lakhs for educational and medical treatment shall continue to be covered under TCS at the rate 5%. Similarly, the rate of TCS on foreign remittance for the purpose of education through loan from financial institutions shall also continue to be 0.5% in the excess of 7 lakh rupees. In another proposal, taxpayer has been allowed to obtain certificate of deduction of tax at source or nil rate on sum on which tax is required to be deducted under section 194 LB of the Act by business trust. The procedure to obtain certificate of deduction of TDS at a lower or nil rate may be notified in due course. Sometimes tax for income of an earlier year is deducted later in the next year, while tax haven has already been paid in the earlier year. Is proposed to facilitate such taxpayer to claim credit of this TDS in the earlier year. TDS TCS is changed on higher rate. If the recipient has not furnished a return of income of previous year, but has aggregate of TDS and TCS of 50,000 or more, it has been proposed to exclude a person who is not required to furnish ITR for such previous year and who is notified by the central government in the official gazette in this behalf. References Budget 2023 speech of the Union Finance Minister, Income Tax Act 1961. The author can be reached at khurana tc at ts@readymail.com. Thank you.